Hello and assalamu alaikum everyone. A very warm welcome to the AA March 2025 mock debrief, day one, where I am investigating the section A of this mock exam, and I'm Kashif Kamran. Now, just before I go into the practice platform and I'll show you the mock exam, and we start looking into the section A, how to read, how to plan, and how to tick the right answers, just let's have a quick view of the time management which we should be spending on the section A of the paper. Now, in terms of the paper format and the time management, you should all be very clear that there are two sections in your AA paper, A and B. A is 30% and B is 70%. So in terms of the time management, you will be giving 54 minutes to the section A. And for in that 54 minutes, you will be attempting those 15 OT questions. Now that means you have 3 OT cases to do in 54 minutes. Each OT case has 5 OT questions. So that's in total 15 questions you are attempting in. So 15 OT questions and you have 54 minutes. So that's roughly like 3.6 minutes per OTQ. Now, I've seen students in a hurry in section A. I don't understand what's the reason of that, why they just want to get over the section A and quickly jump into the section B. You need to score good marks in section A, not just to pass the AA paper, but also to go towards excellence or a place winner position in AA. So you should ideally aim for 20 plus marks from section A, 3.6 minutes per OT question. That is very important. So I hope you will spend careful time in choosing the right answer. Not necessarily at the first go you understand the question, so you have to read it again. And probably you might be confused between options, or you might be stuck between two options that out of these two, which is the right answer. So you have to give the time, and that means 3.6 minutes per OT question. And if you don't understand an OT question, you can just move on rather than glaring the screen, and you can come back later within the stipulated time. So suppose there is an OT question one and you don't understand it after reading it once or twice, just leave it, go on. Come back to the OT question one in the last 5 minutes and try to find the best answer possible. So that's the approach you all should be taking towards the section A of the AA paper. I will be investigating the section B on the day 2, day 3, and day 4 of this mock debrief. So I will be giving you the time management of the section B later. But currently, our focus today is just to investigate the section A of this particular mock exam. So I'll be sharing information on the section B on the day 2. Okay, just let's start on with the mock itself. I hope you can all see the mock on your screens. Please confirm that. Can you see the AAA pre-March 25 mock? Can you see the practice platform on your screen, all of you? Great, thank you. Now, it's very clear, the instructions for section A. It says we have total of 30 marks and we have 54 minutes to deal in. So let's open and let's start going one by one. So we open the first one. Okay, now we have a case study here. That's basically the OT case. And this OT case given over here will help us solve the first 5 questions. Okay, let's see what is the OT case. I'm reading the OT case. I have 54 minutes and your time starts now. Unihart Company, a listed company, is a multinational company operating in the technological sector. They provide software solutions to various industries, including finance, healthcare, and manufacturing. The statutory auditors are Alpha. So the company is a listed company. That's quite an important information. And the auditor name is Alpha Company, who's doing the audit. During the audit for the year end, the audit team encountered several ethical dilemmas. So that means the OTQs here will be on ethical dilemmas. The engagement partner, Sarah, and the CFO of Unihart were were college roommates, sorry, and have remained friends over here. Although due to the busy schedule, they have not met as much over the recent times, they keep in touch at least once a month. So they have friendship, they have been college roommates, and they're at least keeping in touch once every month. So we need to think about the ethical dilemma here once you go to the OT questions. During the audit, the team discovered that Unihart Corporation had overstated its revenue by recognizing sales early. So you have recognized the sales early, which is a material misstatement. The CFO requested the auditors to overlook this, emphasizing that this was a one-time occurrence, quite a bad behavior of the CFO, and would influence the company's stock prices because it's listed. This is a material issue. So they have recorded the revenue early, and the CFO is requesting to overlook that because it will affect their share prices. The para next. The audit team received an invitation to attend a lavish dinner. So they received an invitation for a lavish dinner, which is another ethical dilemma. The audit team received an invitation to attend a lavish dinner by Unihart, the CFO assured them that it was a gesture of appreciation for their hard work. However, the team wondered if accepting gifts would violate their independence. They're very correct into that. The next paragraph, Alpha and Company has identified that current year fees to be received from Unihart for the audit will represent 16%. So current year fees will be 16% of the firm income, and total 15%, 15.5% in the prior year. Now you all know this is a dependency on the client. This is a self-interest. You had 16% income coming from Unihart Corporation this year. Last year it was 15.5%. So the income is exceeding 15% in 2 consecutive years, give rise to a dependency factor. So for 2 consecutive years, it's above 15%. That's quite serious. Lastly, the CFO expressed urgency in finalizing the audit report. So there is all of a certain an urgency coming from CFO to finalize the audit. Uh, the audit team felt pressured to wrap up quickly. So he's trying to intimidate the audit team to wrap up the audit quickly. And he's just trying to say that we are in urgent closing of the audit, even though some areas required additional scrutiny. So that's the scenario. It's a listed company. Number one, the engagement partner, Sarah, and the CFO were college roommates. So that's the first ethical problem. The second is they're recognizing revenue early. The third is attending a lavish dinner. The fourth is representing 16% of the income this year and 15.5% last year. And lastly, the urgency in completing the audit. So we have 5 paragraphs, each with a problem, and each paragraph will convert to an OT question now. That's your reading and planning time. Let's see the first OT question. What should Sarah, the engagement partner, do regarding her personal relationship with CFO? So definitely he has a relationship with CFO. We know that's a familiarity threat. Both of them are friends. What should Sarah do as a partner? Number one, disclose the relationship to the audit committee. Quite good enough, but let's see if we have a better choice than this. Maintain confidentiality, absolutely wrong. That would be unethical. Rescue or remove herself from the engagement, very good, because that's the safeguard for familiarity threat, that you should remove the person, replace the person. And number last, accept the situation. No, that's very bad. You can't accept the situation. So number 4 is absolutely unethical. Number one is quite good, that you should disclose this relationship to the audit committee, but better of them is to remove the person, because that's the best safeguard for familiarity that has even been taught to you in the classroom. So to me, this is the best answer. Rescue and remove herself from the engagement. I marked my answer. Very confident, so I'll move on. Next. What actions should be taken by the audit team regarding the early recognition of revenue? We had an early recognition of revenue, which was material. The CFO don't want this to be recognized, but what actions will the audit team take? Number one, ignore it. That's very bad. They cannot ignore it. Move on. Number two, report it to the CFO but exclude it from the audit report. That's also very bad if the audit report, if the auditor excludes something from the audit report. That is very, very unethical on part of the auditor. Number three, adjust the financial statement to reflect the accurate revenue. Auditor cannot adjust the financial statement himself. He needs to ask the management to adjust it. So currently, no right answer. Number four, report it to the appropriate level of management and those charged with governance and request that they correct the misstatement. That's perfect because auditor himself cannot adjust the financial statement. He needs to report to someone and ask someone to adjust it. So to me, the best answer here is number four. Report it to the appropriate level of management and request they correct the misstatement. That's the best action you take for any misstatement in the exam paper. Number three, regarding the invitation to the lavish dinner, which of the following threats to objectivity may arise? Now, you all know that when you take gifts and hospitalities are self-interest threat, but we have to pick two. Number one is self-interest. That is a good answer. Self-review, no, gifts and hospitalities never reflect in self-review. Familiarity, yes. You will become familiar in a lavish dinner. You will become familiar with the management. The management will have good contacts with you. You will have good chit chat with the management, and you might become friends of management. Professional behavior, no, that's not a threat. Professional behavior is just a code of conduct. So the answer has to be from the first three. Now the options are 1 and 2. No, self-review cannot be the right answer. 2 and 3, self-review and familiarity. No, self-review is not the right answer. 2 and 4, self-review and professional behavior, not at all. 1 and 3, 1 is self-interest, which is a definite answer for gift and hospitality, and 3 is familiarity. Perfect answer. So I'll go with option number 1 and 3. I'll take it as my right option. Moving on to the next one, the fourth. Which of the following safeguards would not be relevant in mitigating the threat identified in relation to the fees? Which is not relevant? So, which would not be relevant? Now, the ones which are relevant, that's not an issue, but the one which is not relevant will have to tick that, which is not relevant. Disclose to those charged with governance that the fees from Unihard company represents more than 15%. That's quite a relevant safeguard for fee income exceeding for 2 years. We should disclose it to the TCWG. So that's quite relevant. A pre-issuance review should be conducted. That's quite relevant. If your fee income has increased and you have a dependency on a client, you should have a pre-issuance review prior to the issuance of the audit report. That's quite a good safeguard. The use of separate teams, that's a self-review safeguard. So that is irrelevant. So we have to pick which of the following is an irrelevant safeguard. So to me, this is the irrelevant safeguard because separate teams have nothing to do with income and dependency on income. So number three would be the right answer. And number fourth is assign an engagement quality control reviewer. So assigning the engagement quality control reviewer is also a relevant safeguard when it comes to fee income. So number one is the right safeguard. Number two is the right safeguard. Number four is the right safeguard when your fee income is 15.5% in the last year and 16% this year. The irrelevant safeguard is number three because that relates with self-review. A lot of time the student ignore this word not in the exam paper. Safeguard would not be relevant. So which of them is not relevant, all of you? Do you all agree that number three is not a relevant safeguard? Because number three relates with self-review. So we have to take the one which is not relevant. Are you all clear? Moving on to the next one, the last one from this case. Okay, Sumaya, back to the previous one. Look at the question. It says, which of the following safeguards would not be relevant? Now you need to find the odd man, which is not relevant. Now that simply means which of the following is a wrong safeguard. Now tell me which of them is a wrong safeguard. The number one is a very good safeguard for income. The number two is a very good safeguard for your fee income. Number four is a very good safeguard for your fee income. The only one is Number three, which is a safeguard for self-review threat. Are we facing a self-review threat in this particular paragraph here? Look at this paragraph. Are we facing a self-review threat in this paragraph? Not at all. So which of them is the wrong safeguard? As simple as that. So out of the four, which is the wrong safeguard for the para I highlighted in yellow? Number three. So number three is the right answer. So reading the OTQs with not is very critical. So at times the student misread the word not and they get the wrong answer. Please carefully read the word not very, very carefully. The last one from this OT case. The CFO of the client has expressed urgency in finalizing the audit report to meet the regulatory deadlines. The audit team felt pressure to wrap up the audit quickly, even though some area require additional scrutiny. As an auditor, which of the following would be the most appropriate safeguard to mitigate the threat? So which of the following is the most appropriate safeguard? Number one, agree with the CFO? Not at all. Why should I agree with the CFO? Number two, resign from the audit. Why should I resign from the audit if the CFO is saying to speed up? If the CFO says to speed up, there are alternatives, not just to resign. Resign is the last resort. Number three, the audit partner should politely inform the finance director that the audit team would undertake the audit in accordance with all relevant professional standards and quality management procedures. So far, the perfect answer. I should inform the finance director that we will take our time, we will adhere to our professional standards, we will adhere to our quality management procedures, and we will not be speeding up the audit, because if we speed up the audit, it will compromise the quality. Number fourth, reduce the sample size. Why would I reduce the sample size? It will increase my detection risk. So number one is absolutely wrong. Number two is absolutely wrong. Number fourth is absolutely wrong. But number three is the best professional answer, that you should communicate politely and you should stick to your professional standards and you should stick to your quality management procedure. Number three, best. So that's the first OT case, going around ethical dilemmas and 5 OT questions around it. Again, you have 54 minutes, 3.6 minutes per OT question. I hope you're getting a sense of how to read and how to answer. The fourth point is that we are in a time pressure, right? So we should reduce the sample size to finish the audit quickly. So you are in a panic. You have more work to do and you have less time. What will you do? You will reduce the sample size. But by reducing the sample size, will you be skeptical? Are you increasing your detection risk when you're reducing the sample size? Why would an auditor do that on the request of the CFO? So it's absolutely wrong. I hope, Sumaya, you're getting the right answer. Is everyone clear with the first OT question? So I've shown you the way to read the OT case. I've shown you the way to read the OT question and to get the right answer, right? Next, move on to the next OT case now. The next OT case. Let's first read the next OT case and then let's solve it. This is the OT case now, which relates to the OT question 6 to 10. Okay, let's read. Every para would be important. It is 1st of July. Okay, so it's the 1st of July. That is important. You are a manager at Seven Kings and Company, responsible for the audit of Sam Sing Song for the year ended 30th April. So the year end of the company is 30th April. You are standing on the 1st of July. That means we're almost completed the audit. Sam Sing Song is a manufacturing company that produce electronic gadgets. The audit is almost complete because you're standing on the 1st of July. 30th April is the year end. And the financial statements are due to be signed shortly. So financial statements are due to be signed shortly. They're not yet signed. So we're standing on the 1st of July and the year end is 30th April. Now comes the first problem. On 1st May, which is after the year end, Sam Sing Song received a notice of a lawsuit from a competitor. So they received a notice from lawsuit from a competitor on the 1st of May. alleging patent infringements. The potential financial impact of this is uncertain, but it is likely to be materials. But it is likely to be material, right? But we are not yet sure of the financial impact. The management, after consulting with the legal counsel, has decided to disclose the lawsuit in the notes to the financial statement as the outcome is possible. So, after consulting the legal counsel, which is very good, the management decided to put it as a disclosure in the financial statement for the reason that it is a possible outflow, not a probable outflow. So, is the management correct? 100%. Possible. Possible means you have to put a disclosure. Is this a management decision? No. This is a legal counsel decision. So, legal counsel is an expert. This has been confirmed by the audit team through direct confirmation from the lawyer. So, has the audit team confirmed from the lawyer that it has a possible outflow, not a probable outflow? So, the treatment adopted by the management, is it right or wrong? The treatment adopted by the management is right or wrong? Everyone, the treatment adopted by the management, is it right or wrong? The treatment is absolutely right. Okay, next paragraph. On 15th May, which is after the year end, on 15th May, which is after the year end, Samsung Song management discovered a fraud. They discovered a fraud on 15th of May. That's after the year end. The CFO had been inflating revenue by recording fictitious sales. So they got to know that the CFO was manipulating the sales. On the 15th of May, they got to know this. That's after the year end. The fraud had been going on for the past 6 months. For the past 6 months, it was going on and has resulted in significant manipulation of the financial statement. So this fraud was going on for the last 6 months, but when you discovered this, you discovered it after the year end. But this fraud was going on for last 6 months. Number two. Number three, this has also led to incorrect decision being made on the inflated financial statement. Definitely, the financial statements were inflated, so you took the wrong decisions, such as taking on additional debts that the company is now struggling to service. Legal proceedings have commenced against the employee responsible, and their final wages have been withheld. So you have just withheld the wages of the employees who were involved in inflating the sales, giving you the wrong picture, and the company has taken some wrong decisions on the basis of the inflated sales number. Lastly, Samsung Song faces financial strain due to decline in sales and increased competition. So that they're struggling. They're facing competition, they're facing decline in sales, their liquidity position is worsening, and they have defaulted on the last three payments. So quite a serious going concern problems they're facing. The board of directors is concerned about the company's ability to continue as a going concern. So the board of directors are concerned about the going concern of this business because they have a lot of material uncertainties. So what's the situation? We have a lawsuit which has a possible outflow, and the management has disclosed it, which is good. On 15th May, you discovered a fraud, which is after the year end, which was going 6 months before. The management took some wrong decisions and they have withheld the salaries of employees and they're facing some going concern problems. Let's see the first OT question. Which type of a subsequent event the material fraud discovery would be classified as? So, material fraud discovery on the 15th of May, which event is it? Is it an adjusting event? Is it a non adjusting event? Is it a going concern event? Or is it a legal event? In the scenario, paragraph number 2 is a legal event, right? Paragraph number last is a going concern event. Now tell me, the 15th of May, you discovered a fraud, and this fraud was going on for the last 6 months. So should it be adjusted? Should the sales be adjusted? Very right. So this is a adjusting event, no doubt about it. This is an adjusting event because you need to adjust the sales, you need to adjust the fraud which is going on for the last 6 months. Right? It's not a going concern event, Mango. Going concern event is the last paragraph. the fraud is not a going concern problem, right? The fraud is a material misstatement. And because it's a material misstatement, so you have to adjust the financial statement. Fraud has nothing to do with going concern here. Fraud is a material misstatement. I hope you're clear with that. Bango. Adjusting event is the right answer. Moving on. Next. Which of the following statement is not correct? So we have to pick which is not correct. So the ones which are correct, you are fine with it. But the one which is not correct, pick it out. So you have to pick the odd statement, one which is not correct. About the auditor's report on Sam Sing Song financial statement. So which is not a correct statement. The auditor report must include an opinion on whether the financial statement presents fairly in all material respects the financial position and performance of the company. That's quite a correct statement, right? When you look at the auditor report on financial statement. Number two, the auditor report includes a paragraph that outlines the auditor responsibility regarding other information. That is perfectly fine. That's what we do in the audit report. Number three, the auditor report must include an emphasis of a matter paragraph that highlights a matter that has correctly been disclosed in the financial statement. The audit report must include. Do we always include an emphasis of a matter paragraph? Look at this word must. Audit report must include an emphasis of a matter paragraph? No, not necessarily. We should include an emphasis of a matter paragraph if the conditions are met. That highlights a matter that has been correctly disclosed in the financial statement. Do we highlight every matter that is correctly disclosed in the financial statement? Or do we highlight a material disclosure in the financial statement? So is number three wrong? Do we highlight a matter or do we highlight a material matter? So number three has something wrong, right? Key audit matters are included in the audit report of a listed company. Is that right? Perfectly right. Yes, we include the key audit matters in a report of a listed company. Perfect, right statement. So which is the wrong statement of all four here? Which one you believe is the wrong statement? All of you? Number three, definitely. Number three is a wrong statement. Click, go on. Which of the following would be the consideration by the auditor when evaluating the appropriateness of the management going concern assumption? So what will the auditor do? What will be the most important thing the auditor will do when they're evaluating the management going concern? Now, you know, going concern is the foreseeable future. The company's current financial performance, no. When we are evaluating the going concern, we look into the future. The company's historical trends, not at all. We are looking into the going concern. Going concern means the future. The company's ability to continue operations for the foreseeable future. Perfect answer. And the company's liquidity ratio in comparison with the industry average. Which of the following four is the best? Which is the best way to evaluate the going concern? Number three, foreseeable future. Looking into the operations for the foreseeable future. Will the company continue? Not three and four, Bashir. You have to choose one. Three is broad and four is narrow. In four, we are only looking at the liquidity side. But in three, we're looking at the operations. Will the company continue to operate in the next 12 months? What's the definition of a going concern, Bashir? Will the company be able to operate in the next 12 months, not just the liquidity side? So which is the right answer then? Number three. Number three is the best possible answer. Move on. Given the management decision to only disclose the lawsuit, and we know that was right? The management was to disclose the lawsuit in the paragraph number two, disclose the lawsuit in the financial statement without making any provision. What will be the impact on the audit report? Do we agree with management disclosing the lawsuit and not making a provision? Do the auditor agree to that? All of you? Do you all agree that the management stance of disclosing was right in light of the legal advisor? Right. And was it material? It's likely to be material. The management was giving a disclosure which was material. So, what will be the impact on the audit report? Issue an unqualified opinion with an emphasis of a matter paragraph seems very good. Issued a qualified opinion. Why would I give a qualified opinion when I am in agreement with the management? Issue an adverse opinion. Why? Issue a disclaimer. Why? I am happy with the management. What the management is doing is perfectly right. So I'll issue an unqualified opinion because I have no problem with management, but I will give an emphasis because the disclosure given in the note is material and the disclosure is very important. So all of you, I hope you agree that number one is the best answer. We go on, move on to the next one. That finishes off this, and sorry, we're left with the last one, sorry. After conducting procedures on going concern indicators, like the additional debt that Samsung Song is struggling to service, the financial strain due to declining sales and increased competition, the notice of a lawsuit from a competitor, the engagement partner has concluded that there is a material uncertainty relating to going concern that needs to be disclosed in the financial statement. So, what is the conclusion of the partner? That there is a material uncertainty which needs to be disclosed in the financial statement. Which of the following statement regarding the impact of this disclosure in the audit report is correct? So, which of the following statement regarding the impact of this disclosure is correct? Which disclosure? MURGC. Number one, an unmodified report will be issued if the management correctly and adequately disclose the material uncertainty uh, relating to the going concern in the financial statement. An unmodified report will be issued. What about adding the paragraph about MURGC? That has not been mentioned in the point number one. Number two, an adverse opinion. Why would I give an adverse opinion? If the will be given in the audit report if the management correctly gives the disclosure. If the management gives correct disclosure, why would I give an adverse opinion? Correct, adverse are two opposite things. Number three, an unqualified opinion will be given if the management correctly and adequately disclose the material uncertainty, and an emphasis will be added. Will I add emphasis for MURGC? Or will I add an MURGC paragraph? Last, an unqualified opinion will be given if the management correctly and adequately disclose the material uncertainty, and a material uncertainty relating to going concern section will be added. So I hope you all agree. Number four is the best answer. So if the management gives a disclosure, I will issue an unqualified opinion and I will add a material uncertainty relating to a going concern section in the audit report. So number fourth is the best answer. Now we have done 10 OT questions and we started at like 12:45. So it's roughly 35 minutes. We still have a time reaching up to 54 minutes to complete the 15 OT questions. And I'm going a bit slow in the classroom, right? Last, we have the final OT case. And still we have something like 19 minutes more on our hand. Look at this question. Let's read it. It is the 1st of July, so we need to mark this because dates are important. You are an audit supervisor at Roberto Company, conducting the audit of Carless for the year ending 30th of September. Always mark the year because examiner can confuse you with events after and before the year end. Carless operates a number of hotels providing accommodations, leisure facilities, and restaurants. Several matters have come to your attention. Number one, leisure facility upgrades. During the year, Carlos made a significant cap asset expenditure to update the leisure facilities at the hotels. So you have done a significant capital expenditure to upgrade your leisure facilities at hotel. The company acquired new gym equipment, renovated the swimming pools, and expanded the spa service. So that's what they've done under the capital expenditure. Then these non-current assets are critical for attracting guests and maintaining the company's competitive edge. So definitely, if you're running a hotel, the swimming pool, the spa services, and the gym equipment, they're all important to attract the guest and to ensure you have a competitive edge. Number two, food poisoning. There have been allegations of food poisoning from customers who visited one of the Carless restaurant. Some customers are claiming substantial damages due to illness caused by the contaminated food. The legal team is actively handling these claims, and the financial impact could be investigated. So the team is handling the outcome. The outcome is not yet given to us, but you are facing some legal challenges from your customers. So allegations of food poisoning from the customer who visited one of the Carless restaurants. Number three, Carless management upgraded the inventory system. The new system aims to improve accuracy in recording the inventory transactions, including purchase, usage, and disposal. However, there are concerns about the effectiveness of the implementation and whether the system accurately reflects the physical inventory level. So there are concerns about the implementation of the system, and there are concerns about whether the system is operating effectively or not because it's a new system. And lastly, the audit team has obtained results from the external confirmation of a sample of trade receivables. So you've got some results from the trade receivable confirmations. And lastly, Carless depreciate its non-current assets over the estimated useful life. So you are depreciating your assets on a useful life. The company uses a straight line depreciation for its building, furniture, and equipment. So we have good information about the capital expenditure. We have information about food poisoning. We have information about the new inventory management system. We had information about trade receivable circularization, and we have the depreciation on a straight line basis. Number one, which of the following audit procedure would be the most relevant for evaluating the existence assertion? Evaluating the existence assertion relating to the expenditure on the leisure facility. So, which of the following test the existence assertion? I'm giving you 2 minutes. Think of the answer. Your time starts now. Evaluate the existence assertion. Which is the best procedure? Okay, we're already getting the answers. Okay, Bangu, which one is the right? Three or four? You're giving both three or four? Three, good. Okay, anyone else? Do you agree with what Bango is saying? Very good, perfect. Three is the right answer. So, absolutely, three is the right answer. Visit the hotels and physically inspect the new gym equipment, renovated swimming pools, and expanded spa. Because existence, you need to see something recorded in the books is actually existing. The number one, take a sample of the assets and ensure they're recorded. That's completeness. Number two again is more about completeness. Number four, sorry, is more about accuracy. You are agreeing the amounts, the valuations. So number three is perfect existence here. Yeah, one is completeness. Number three is existence. Move on. Next. During the audit of Carless, you discovered that there has been allegations of food poisoning from customers who visited one of their restaurants. Some customers are claiming substantial damages to the illness caused by the contaminated food. The legal team is actively handling the claims, and the financial impact could be significant. Which of the following audit procedures would be most relevant in gathering audit evidence regarding the issue? Most relevant, most relevant. Which is the most relevant evidence for evidence regarding the issue of contamination? Your time starts now. See which is the best answer. Which is the most relevant? Perfectly. In number two, you are inspecting the kitchens. Why would the auditor do that? Vouching sales transactions of no use. Confirming the balance. For what? You need to review the legal correspondence and the settlement agreements relating to the food poisoning claim because the claim has already been filed. The lawyer is dealing with the claims. So there must be a legal correspondence which has come from the customer. Review the legal correspondence, agree the amount, agree the issue. That's how you go about it. And legal correspondence is the most authentic, most reliable evidence among the all four. So that's number one answer. Move on. Carless has upgraded the inventory system. We know that. Which of the following procedure, which of the following procedure would be most appropriate to assess the design and operating effectiveness of the system? Which of the following is the best procedure to check the design as well as the operations? Your time starts now. Okay. Number one is telling us about the design of the system and the controls incorporated into the document. So number one is telling us about the design as well as the controls. So it's giving us both sides. Number two is just telling us perform test of details. Why would we perform test of details on a new system? We normally perform test of controls. So number two is absolutely wrong because it says test of details. We should have performed test of controls. Physical verification of inventory, that's basically a substantive procedure we do at the year end. And perform analytical procedures, that's also part of substantive procedure. So when there is a new system, we need to understand the documentation of the new system. We need to understand the controls of the new system, and we need to document it. That's part of the internal control evaluation. So number one is the best answer because you are evaluating the internal controls and you're evaluating the system in place. So my test of details means substantive procedures. So number one is the best answer. Do you all agree with number one? Because in number one, you are checking the design as well as the controls which the management has put in place. So number one is the best answer. Next. During the audit of Carless, the audit team obtained external confirmation from the customer to assess trade receivables. So you have got confirmations from customers for trade receivable. Which assertion is primarily addressed by this procedure? When you circularize confirmations to customers, which assertion is primarily addressed? Which is the best one? Yeah, test of details are same as substantive procedures, Bashir. Which assertion is verified through the confirmation sent to customers? Which is the best one of the four? I even mentioned that in my lecture. Very wrong answer. When we send confirmation to the debtors, what are we verifying? Debtor is an asset or a liability, Sumaya? Anisu, is debtor a liability or an asset? Which is the most important assertion to verify for an asset? When we send a confirmation to a debtor, what are we confirming? Do debtor exist? Do customer exist? We want to ensure existence of a customer. What happened to all of you? Why all of you said completeness? Completeness is for a liability, not for asset. Existence is for an asset, right? Primarily, it's an asset. Existence. I don't know what happened to all of you who thought of completeness. And this is mentioned in my lectures even that for an asset, it's existence. And when you send a confirmation, you're verifying the existence. I thought this was an easiest one, and you all made a blunder. That's what you do in the actual exam paper. Last, think twice. Which of the following audit procedure would be the most effective in assessing the reasonableness of Carless straight line depreciation policy for its non-current asset? Which is the most appropriate procedure which could assess the reasonableness of the straight line depreciation policy for the non-current asset? Tell me. Your time starts now. Which is the most appropriate procedure for checking the reasonableness of the straight line policy for the non-current asset? Rule out the wrong ones. Rule out the wrong ones. How would you ensure that the straight line basis is being followed reasonably? And in the straight line basis, do we have the same depreciation charge each year? In a straight line basis, do we have a depreciation charge same each year? Mostly, right? Mostly, if there is no addition, right? So in number one, select a sample and trace them back to the original purchase invoice. What are you confirming? The amount or the depreciation? You're confirming the amount. So this is about valuation. You're confirming the amount. Physically inspect a non-current asset to ensure they are in use and condition. You're just verifying their physical condition. You're not verifying the reasonableness of the straight line basis. Send confirmation to suppliers. Why would I send confirmation to suppliers when I'm assessing the reasonableness of the straight line basis? And lastly, compare the current year depreciation expense with the prior year expense and industry benchmarks to identify any significant fluctuation. Has the depreciation expense of the current year fluctuated from the last year? We are following a straight line basis. It could only fluctuate if there are some additions. So, if there is no addition, do we expect the same depreciation expense the last year to be this year? Yes. But if the depreciation expense has changed from the last year to this year, that could only be due to the addition. Is everyone clear with this? Is everyone clear that number one is checking the invoice amount, the number three is checking the condition, the number fourth is checking there is no need of sending the confirmations in case of reasonableness of the straight line. So number two is the best answer, comparing current year depreciation with the prior year, and if there is any unusual fluctuation, asking management to explain. Reasonableness means appropriateness, Bangu. Appropriateness. Assess the appropriateness of the straight line method. Is that clear to all of you? That number two is the best answer here, right? And you press the next button. And that finishes off the section A. And we almost took 50 minutes in a live class. We had 54 minutes to do it. So I demonstrated, even I was talking to you and I was giving you time and I was having a chit chat with you. Even then we took 50. So is it doable in the exam in 54 minutes? Is it doable to read the case, understand the case, highlight the case? Every para in a case converts to one OTQ. We read OTQs. Please be very careful looking at the word not. At times, a student overlook the word not, and that changed the meaning of the sentence. So if the examiner is saying which of the following is not, so you need to find which is wrong of the following. So be very careful about that word not. So wherever you struggle, just give time. 3.6 minutes per OT question. That's not a bad time at all. Okay, now for example, you've done your section A. You go back and you click on the navigator, and on the navigator, you go back and you click on the last question, question number 25. And then you have the option to press the next button on the last question and you end your exam. Okay, now comes the last screen and it gives you an option to end the exam. You end the exam and it says, do you want to finish it? You says, yes. Okay, you finish off the exam. Are you sure you want to end the exam? Yes. And you finish the exams. Now, what you can do after this, you have an option to exit. Uh, just 1 minute. I'm just getting back to your question. 1 minute. You go to the exit option and you exit. Now, once you've done the section A, you end it. You will go to the mark section. And in the mark section, you will find the mock you've done. See the AA pre-March mock, which you just attempted. right? And you can just self-mark it. So press the self-mark button and you go inside the self-mark option. Just 1 minute. I think I've just opened the wrong one. The two I've done over here currently. Yeah. So this is a self-mark and you can see ACCA has marked the answers for you. We press the options. Now ACCA is saying you got the right answer. See my score. My score is 30 of 100 because 70 marks is section B, right? So currently I've scored 30. That means I've scored 30 out of 30 so far. So you can check your answers ticked. If you got a wrong answer, ACCA will put a cross and then will tell you the right answer in the self mark option. Is everyone clear how you can go down and self mark yourself to see whether you got the right answer or the wrong answer? Is everyone clear with that? Yes, Bashir, you're totally right. The question was asking for the reasonableness of the straight line basis. That has it been consistent over the year? Has it been appropriate over the years? We know we have done some additions this year in the leisure equipment. So when you compare the current year depreciation with the last year depreciation, you will find a fluctuation. But that fluctuation is because of the capital expenditure you've done on the leisure equipment. So normally when the management is adopting a straight line basis, the best way to check whether it is reasonable or not is to compare the current year depreciation with the last year. Assuming there are no additions, the depreciation expense of the current year and the last year should be the same. So that was the best procedure to check the reasonableness or to check the appropriateness of the straight line basis. I hope you got getting your answer, all of you. I think Bangu was asking that question. I hope you're clear on that. But please confirm me, have you got the way to reach the self-mark area and to check which of your OTQs are right and wrong? So I currently got 30 out of 30 in this. Okay, that's great. Okay, so I hope you're all fine with the section A of this mock debrief. 54 minutes. Did you got evidence of the reading and planning time? Did you got how to read, how to attempt? Have you got some confidence booster going into the section A? How to read it, how to attempt it? Have I demonstrated that realistically to all of you? Okay, so I'll be back with section B. And in section B, I have to do three questions. You know, there is a 30 marks question, then a 20 marks, then a 20 marks. So I'll be splitting that over the 3 days agenda. So each day we'll do one question and with time management. And I'll not be solving the full questions, but I'll be giving you a glimpse. I'll be doing the brainstorming and I will be guiding you the best way out in each question. So I'll be back with the section B of this mock exam. Stay tuned for that. Thank you so much for joining into the live session. And this mock recording will be uploaded and I will be sharing in the WhatsApp group that the recording is now available. Thank you so much. Wish you all the best of luck for your upcoming exams. Goodbye and Allah Hafiz.